Good evening again. Today we are discussing some of the concepts related to cost. So those cost concepts that are important while making the decision. So decision making is the concept in the management accounting or the cost accounting where they have to make the decision related to, for example, when the business has two choices, either to go for the A project or the B project, or they have to go for the outsourcing or in-house production, or there may be a decision related to either they should start a new product or not. So for all these things, or they have to get some new order or not, so they have to decide. So for this decision making, there are some costs which are important. So some costs are relevant in decision making and some costs are not relevant in decision making. So today we will discuss the concepts while this cost is relevant in decision making or this cost is not relevant in the decision making. So the first thing that we are going to discuss is the concept of the relevant cost. While making the decision, now what may be the decision? It may be a make or buy decision. What is make or buy decision? For example, the company has some capacity, so they are having that capacity, they are starting a new project or they are getting some new orders, so they have to decide either they have to produce it inside or they may go for the outsourcing. For this purpose, again, what they need the decision making. So they have to decide either this cost is important, this cost is relevant in decision making or not. So a simple or the basic definition is what? That is simply the concept, this cost that is relevant in decision making. So any cost which is relevant in the decision making will be considered as the relevant cost, and some costs that are not relevant. So we will discuss this thing with the example. I just give you a very simple example. Let's say there is a rent of factory. So that rent, as we have already discussed, that is what? That is the fixed cost. And then, for example, we have a raw material. And the raw material obviously is what? Is the variable cost. If they are getting some new order, is there any effect of this new order on the rent of the factory? Obviously no. Why? Because they produce 1 unit, they produce 100 unit, or they produce 0 unit, or they produce million units, still the rent of that factory which they have already occupying will be same. It means the rent of factory is not changing, so it is what? It is the fixed cost. So while making a new decision either to start a new project or not, either to get some new order or not, so should they consider the rent of the factory? Obviously no, because if it is within the limit of that or within the scope of that, so it means it is not relevant. So we can say that the rent of the factory is not relevant while making the decision. Now the next thing is the cost of the raw material. Obviously when they are producing some product, they need some raw material. It may be a direct material or indirect material. In the previous lectures we have already discussed the difference between direct material and indirect material. Now if they are getting some new order, obviously they have to think, they have to focus, they have to consider what is the cost of the raw material. Obviously it is the variable cost, so any variable cost related to the raw material, because it is changing. For example, if they are not producing any unit, there will be no material cost. If they are producing 1 unit, 2 unit, 3 units, obviously it is changing with the usage or with the capacity or with the production change. So it means while making the decision, they have to consider that how much will be the cost of the raw material. So from this we can get a very simple decision, or what we can get a very simple rule, that any cost which is the fixed cost is not a relevant cost, but any cost which is a variable cost, obviously that is what? That is relevant while making the decision. One more cost that is very important, and we always use that one, that is the concept of the sunk cost. Okay. Sunk cost is simply any cost which you cannot recover. What do you mean by cannot recover? Let's say that the company has purchased some air conditioner, they have purchased some machinery. Let's say they have to consider some machine. Now they have paid $5,000 for that machine. Now they may be selling it for after 1 year, 2 year, 3 year, even maybe after the life of the asset. Anytime they sell it, they may recover something. Maybe, for example, after 3 years, they are selling it, they may be getting like a $300 or $3,000 for that. It means this amount which they have paid, some of that is recoverable. So it means it is not a sunk cost. But while running the machine, what they need, they have to pay the electricity bill or the power bill they have to pay, or they have to pay the fuel. Now they are running the machine by using some fuel, some power, some electricity. After some time, for example, if they want to get that money back, the money which they have paid for the electricity bill, the money which they had paid for the power bill, or the money which they have paid for the fuel, can they recover? Obviously, they cannot recover it. It means that is a sunk cost. Any amount which they cannot recover while making the decision, yes or no, the purchasing or not. So anything when they are making the decision, it will be considered as the sunk cost if they cannot recover the amount. So the machine cost is not a sunk cost. Anything which they can recover is not a sunk cost. But anything which they cannot recover, it is totally irrecoverable. Obviously, that will be considered as what? As the sunk cost. So now, just what is the relationship of the sunk cost with the relevant cost? Either it is relevant or not. Obviously, it is not a relevant cost. Why it is not relevant? Because this money you have already paid. It is the money which you have already paid in the past and which you cannot recover. You make a decision A, you make a decision B, you buy the product or you produce the product. So whatsoever you are making the decision, this cost is not relevant. So here we have just three basic things that we have discussed today. The fixed cost is what? It is not a relevant cost in decision making. But the variable cost is what? It is relevant in making the decision. While making the decision, we have to consider that what is the variable cost. And again, the sunk cost, obviously, it is not a cost which is relevant while making the decision. So these are the basic concepts related to the relevant cost. So we will discuss in more detail in the next lectures that how to make the decisions, especially the make to decision to make or buy. They may have a decision about the 2 or 3 products. So there's complete topic, or what we say the sections related to the decision making. So we will do in the next lecture. Thank you very much.